All right, good morning, traders. Welcome to the Bookmap live market analysis here. We'll look at all markets. This is Bruce at Bookmap. I'll be your host. Monday, Tuesdays, and Fridays. However, not this week. Just today, Monday. We're having our Pro Trader webinar event all week this week. Also on Monday, next Monday, we'll continue on with Data Dash, crypto trader. Anyway, I'll talk more about the Pro Trader webinar in just a second here. You guys know who I am. Been doing these webinars for quite a while. We'll jump right in, take a look at the market. You can follow me here on our Discord, Bruce at Bookmap, and then also my Twitter at Flow Order. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, our blue jacket, if you guys want to sign up for that, I mentioned this on Friday. This is a competition that we have. However, we're about to launch publicly our Bookmap Junior Academy and Bookmap Academy. So there'll be more details on that. I would suggest if you're interested in that, there's more details coming out soon. It's an on-ramp to getting a little bit of mentorship, creating some content. That means honing your own plan, and then you will, if you can meet the requirements, you can get Bookmap for free, we'll compensate it for you. Okay, so more details coming out about that. If you're interested, like I said, I would suggest get going now in that blue jacket. So just go to bookmap.com and let me show you where it is. And then hashtag blue jacket, I believe. Yeah, here we go. Here, I'll put this into the chat for you guys. Sign up and get going in here. All right, so you can document some of the trades or some of the insights that you have here. And then you'll be a leg up here when we launch the Bookmap Junior Academy. Okay, and you might win too. So it's a kind of you might win. If you don't, well, you might be invited to the Bookmap Junior Academy. All right, so let me put that into the chat here if you're interested in that. Okay, good morning, Tony. All right. Okay, ES is selling off. Let's look at our bigger picture here before we get started. What's happening out there in the markets? All right, so we'll start here looking at our higher time frame candlestick chart. It's been pretty horrible activity in here. You can see wicks on the daily on the left-hand side here on both sides for several days now. This was a move off the bottom. You can see here move. This was a Friday, I think, a couple weeks ago, or a week and a half ago, whatever. And then it's been up here chopping since. Okay, now this is pretty down day, as you guys can see. We see lower lows, or lower highs here, and these are red candles, and we see an equal low here from last session. So, and here come the sellers right now. All right, so yeah, let's see if we can get down to 41.20, and then maybe we can test the lows here at 41.10 or so, somewhere around there. That's what off the daily chart, that's what I'd be looking for. Now let's go into the hourly and also the 15-minute here on the right. Hourly in the middle here, yeah, it looks pretty good. We can see we opened up here and we've been selling, opened up pretty high here at 44, and we've been selling off since. So yeah, looking for that move like we just mentioned, maybe down into 20 here. We're at 24 at the moment, 25, and then maybe we can even get down further to this 41.10. It's actually about 12 or 11. Okay, 15-minute chart here on the right, same thing. So just looking for that move down into this 20. I like this 20 level. I know this is what I'm looking at here in the candlestick chart, and this will relate to your guys' volume profile charts. Um, so yeah, I won't. I'm not going to. Well, the profile chart gives good information. This chart does as well. Okay, we know there's wicks down here. Okay, from this session over here, or this 15-minute session, and then all of these in here. So we know that there's a lot of trading around in here, and we're just coming down and trading into that right now. This is pretty good momentum. I would look for the continuation of it to trade down into this 20 level. Okay, at least 22, let's call it. Right now we're only like 6 point or 4 points away from that, but it's looking pretty good if we can, off of these three charts here. All right, so let's just put it that way. Let's jump over now to Bookmap and get additional insight and see what's going on here. All right, so you guys on YouTube can probably hear my market pulse tool going off here. This is sell liquidations here. This is an interesting one. I'm going to cover this really quickly for you guys because we could not cover it. I had some issues on Friday. This is a new release for you crypto traders. Okay, let me show you what this is. It's pretty fantastic. A new market pulse algo in here. I'm going to dim the heat map a little bit here. All right, well, what we're looking at here is even more descriptive or detailed than your iceberg indicator, or your stops indicator, I should say, on the futures, because stops are showing where people are using the order type of a stop, and that typically means a stop loss to try to exit a trade without incurring too many losses. This indicator here that's on the chart we've had for a while. This is showing liquidations. All right, so that's a lot worse than a stop run. It means that people's account here, they're getting a margin call, that their accounts are being liquidated, and that we can show exactly how much in terms of dollars and how many events in here. So here's $19,000 up here with 3 separate events in here. Okay, we're getting a lot of liquidations here right now on the sell side, and you can see it now. These are buyers up in these areas here getting liquidated down here. All right, so they have to sell, and that's precisely what they're doing. We can see the details here. It's a big one. Okay, 125,000 and 13 events in here. So a lot of people are getting liquidated right now. All right, and this new market pulse tool is an interesting one. It's not based on the volume. It's based off of the liquidations. All right, so this is kind of a change here to be able to understand that here. It's kind of a off of the liquidations here. Now we have a market pulse tool telling us. All right, so anyway, that's that. I wanted to cover that. Now I'm just gonna mute it for now. We can revisit it if you guys have any questions. Yeah, Kim, that's exactly what it means. It's like they just don't have money to cover their losses. So the exchange has no problem just automatically liquidating your position, right? And then basically saying, well, if you want to continue to trade, you will have to put more money into the account. All right. Hello, Stan. Good morning. Good morning, Slow Down. And let's see here. Okay. Okay, distinct orders in the order book. Okay, so let me see what you're talking about here. Kenjirado in Discord sent this in. Distinctions in the order book. Okay, well, I'm not sure. This was something from Tom's webinar. I mean, you can see that clearly they're getting filled in here. And COB column here. Yeah, so yeah, I don't know if you're talking about the current order book or the historical. I mean, you can just see that they're filled here, and they're getting filled here as well. You can see your absorption indicator here. I believe that's absorption. Yeah. And then the icebergs are here, and the bigger one, green, and then also the stops are here. So you're getting quite a few things happening here, and then this is what the level we were just talking about, 4120. So this is going to be an important level moving forward, right? He was referring to small liquidity under the finger. Okay. Yeah, I'd have to. I'm not really sure, and it's hard to read in here right now at the moment. But what this means in here is to key in on these little areas in here. First off, was it absorbed? Yeah, it was, right? It was completely absorbed, traded into this high liquidity, and then there's very little liquidity, it looks like, underneath, but sellers really don't show up. I would imagine there's some icebergs in here too, because I do see some selling in here, and I can see it down here as well, that I see icebergs starting to ping to the upside. So they are absorbing after this liquidity that was in the order book was completely absorbed, right? So we know there's some larger players in here supporting price at this level and getting involved, and we get a little bit of a blip to the upside here. Not much, but there's very little liquidity in here though, right? So that's what it kind of means to me. I don't know if that's what the problem is. He has his own terminology. Yeah, exactly. That's one thing, guys, I really try to do in here and with our other educators, is to have the proper terminology as best as we can, right? That's why we have a glossary on our web page or in our knowledge base. I'll show you where that is. So when we're talking about apples, we're talking about apples. When we're talking about oranges, we're talking about oranges. Proper definitions of, liquidity, microstructure, aggressor, passive orders, just the ABCs here, icebergs, also absorption and exhaustion. These are we have to be rather precise about them, otherwise it's going to cause a lot of confusion, and we don't want to do that. But this was completely absorbed, it looks like, at least from this perspective here. And then we get our buyers come in, but then there's no one else left here. You do still see some icebergs getting filled in here, which is interesting. And then it moves down, right? So these larger players got what they wanted. They got filled in here, it looks like. But price continued on lower here. Right. So anyway, this isn't I'm sorry, that's the 4125 level. Our 4120 here is what we were just talking about now. Okay, so let's jump over and take a look at that level and seeing we were looking for the move down into it here. Okay, so yeah, and since we opened the webinar, we were looking for this move, and we were at 26, I believe, when we were looking for this. Yeah, we were about 26 or so. It's moved down to about 23. That's been it. So kind of slowed down a little bit here, and a little bit of range bound right now. Yeah, we're still looking for the move lower, okay, until we see something different. All right. Yeah, and then another thing that we look for again and again, and I want to cover this in here because this is really, we want to understand the strength of moves in here. It tells us who's in control of the market, and that's what we've been doing it for years. Here's our sellers. They move the market lower. They are in control. Okay, well, they're in control in a trend now. Okay, from 9:30 open here, you can see all these sellers in here. All right, now here's a little bit of buying in here, tries, but that's where we look at our market structure. Okay, to understand the volume also within the structure. A little bit of buying. They do break the smaller structure here, but that's it. They couldn't go further higher. Okay, so for example, we would look for, if they could, this would be a first test, would be up here, okay, or here or here, somewhere around there, and they couldn't even reach it. We got another retest by the buyers here, and again they fail to reach it. That's when we're looking for our sellers on down here, and then the continuation. All right, now we're looking for a potential retest back to here, okay, or the top of this little range here. Okay, now let's just be accurate here. We're drawing technical areas here, but it's based on the behavior of the traders. That's a big distinction, right? That we're looking at how the volume and how it transacted in here, also with the passive orders, the relationship, that context. And that's where we're drawing our lines. We're not just drawing our lines in here, you know, willy-nilly, just because they might be technical levels. Like this would be, you know, resistance up here. This would be support down here. Okay, we're actually looking at the behavior of the volume and the orders in here, passive orders. All right, well, so we got a breach above here. Okay, and it actually almost retested to this little nook right here, which we see the transactions of these limit orders here on the bid. Okay, so all right, so let's take a look here now. What else do we have? All right, so all right, well, we came back down, and here they are bidding up at a higher level down here. Okay, and now we're breaking that level. Okay, great. Buyers, let's see if you have enough buying pressure to come up to more technical level, would probably be here. Okay, so let's put up our horizontal line right here. Okay, now we're still looking for this move lower, okay, until we see something different. Now in a smaller time frame though, we're looking for it to retest these areas, and this would be a pullback basically in this bigger move here. Right, makes sense? Let me know if you have any questions. It's important to understand these things. We talked about low volume pullbacks as a potential setup. Now it depends on your time frame. Okay, so anyway, when we started the webinar, we were here, and we're looking for it to continue on lower, which it did. And now we're looking at it and looking at these levels in here and looking at the behavior, and noted that we broke above here, and they're supporting it at a higher level here, and we're getting more buyers. So now we're looking for it to pull back and retest these areas here. All right, so we're still, you know, sellers in this time frame are still in control, but you can look for these counter trend trades to trade up and to test these areas in here. Okay, excellent. Thank you, Hector. You're tracking. All right, there we go, guys. There's our move. Now we should also look for and anticipate, if that move unfolds, that we should anticipate a stop run in here. Okay, and we do have one. Okay, so there you go. Now we don't know what's going to happen here. Let's take a look at the volume here, and actually I'm going to turn off, and I'm going to go through this example that's right in front of us here. So I just want to cover these things in more detail when they unfold in real time. All right, so let's take a look at cumulative volume delta and this action from here onwards. Okay, and we know that sellers are still in control from here, right? We can see it. Here's our cumulative volume delta. Now look what's happened here. Okay, we've come back up to test this area, and it's basically on the same amount of volume in here, more or less, right? Because cumulative volume delta is just buy minus sell over time. So all that selling and then all that buying coming in is now equal here. All right, so we don't know. We're looking for something higher probability right now, and we're going to see like who's going to move the market. This is not a low volume pullback at this point. Okay, so our assumption, original assumption, or our insight to the move lower into 20 is we'll have to rethink that now. Okay, I think it'll still get there today on a higher time frame, but you know, that's kind of what we're looking at right now. Okay, it is on a higher time frame of getting back down into just 20 here. Okay, and then 12 here. Okay, due to what we talked about when we started the webinar, especially on this daily, but the hourly and also the 15 were aligned here. All right, so yeah, so anyway, now do we have an edge up here is the question. Since we're looking for more selling in here, driving this lower, they're in control. Well, that's being really tested here, and we don't have an edge. Okay, here's why. All of this buying is equal to this selling move here, okay, according to CVD. Another way of doing that is you can look at your imbalance indicator here. We'll use the zoom by drag tool and very precisely left click, hold, and drag. Okay, and we can look at also the volume and balance here, and you can see that it's yeah, even a little bit to the upside here. Okay, so there's more a little bit more buyers than sellers in here, okay, in this viewable range within our chart range here. Okay, so another way of kind of measuring this, same as cumulative volume delta. Okay, this add-on up here is part of our Global Plus subscription package. All right. So anyway, don't really see an edge up here at the moment. Okay, we were looking earlier when we started the edge to the downside. Okay, it didn't get down to our level. And then we noted the buyers coming in, the support here, and then the buyers coming in yet again here. So we marked up these levels in here, and we're looking for price to go test it, which it's already done, and it's above it, in fact. All right, so now we'll see, is it going to accept up here? Is it going to come up higher? Is it going to come up to this 33 level up here? Okay, this recent swing here. Well, let's take a look. Yeah, looks like it wants to. Yeah, we see more buyers coming in. We have a little bit on the bid here, and more buyers coming in. So we look forward to trade up into this liquidity up here, maybe even 34, maybe above 33. And we see the buying continue here. All right. So again, you know, just putting these pieces together, putting it into kind of a more holistic plan here, and understanding who's in control in some of these areas here. And this is a very big difference here in terms of the buying coming in. This is not a low volume pullback. Hector, you know, I think I'm going to start using microstructure incorrectly, but let's just be clear on this in terminology, because also Trader was talking about this. Is microstructure means sub-second. All right, so I have to zoom in and I have to be at sub-second levels to really, if technically, okay, just I want to get that point across in here. That's what it means. When we look at you know, zoom in like this, it looks like it's microstructure, but it's really not. It's just a lower time frame. That's all. But yeah, you know, if that's what you know, people understand in here, then that's fine. We can talk about it like that. And we're going to look for the same themes or same concepts in here on this smaller time frame as we do in our higher time frame in here. Okay, so this would be yeah, almost you know, I don't know what we call this, maybe like a, you know, a higher high, and then it just kind of fell. So it didn't really do a head and shoulders here, but it kept digging higher or going higher and then the sellers come in and move it back down. And they've already traded into liquidity here and bottom of the range here, right? So yeah, it got as high as 33. Didn't come up to our line there yet. Yeah, Hector, I'm going to kind of go back and echo what we discussed on Friday about some of these moves and the directions and what they mean. This is a starting point. It's something you need to go back and study, and you have to convince yourself, okay, that this works. Don't take my word for it. All right, that's really important. So just, do some of these ideas hold water? I think they do, based off of the experience I've had, and some of my studies as well. Okay, so I have my reasons for it, but I'm looking for you to prove me wrong, okay, or for you to prove it to yourself, basically. All right, that's really the key. All right, so let me see here. I'll jump over to our YouTube questions as well. Shadow, good morning. Let's see, can we look at no, you cannot adjust the tick settings. Only in crypto can you do that, which is really nice. Maybe some other futures markets, but not CME. That's just not possible. Okay, well, with CME, what you can do though is you can trade the micro or look at the micro chart if you want. It's not really reduced, it's just the contract size is reduced. All right, so hold on a minute here, and let me get to more questions. Yeah, it's nice how crypto does that, that you can really, here I'm looking at Bitcoin, and I recommend that you guys, you look at all that trading in here, look at all of this activity, but here's the best bid and offer. Why is all this trading taking place outside of the best bid and offer? Because this contract spec in here, you can have it down to a hundredth, or even a thousandth of, maybe a 10,000th, I don't know, of the of Bitcoin, for example. I mean, it's a $27,000 instrument, right? So all of this trading in here, we're just showing every $10 we're showing a tick. That's it. That's the way and I recommend that you guys set it up that way, else you're probably going to run into some memory issues. Bookmap cannot handle showing full depth of thousands and thousands, hundreds of thousands of, millions of levels of liquidity. Okay, I mean, we already show I think millions of levels, but when you really get into it, like it's just overwhelming, and it's not necessary, right? You're gonna, I mean, if you're hyper scalping, it's going to be pretty tough to make money out of it, just because of the spread, and it's not easy. So a little longer term, I would recommend, or higher tick level here. Yeah, Stan, we can take a look at, I showed earlier the new market pulse algo here for the crypto markets. Okay, this is showing liquidations in here. So here's some liquidations, a liquidation indicator that we've had for quite a while, but now we can also show it here in market pulse. Okay, so that's one, and we showed some of the other ones as well on Friday, but I can demo them again for you. Okay, hold on a minute. And yeah, we're not seeing too much at the moment. Let me just recap here before I get into market pulse. Yeah, well, more buyers still coming in now. Okay, so In fact, they're still coming in. Now, I'm still, in terms of this being higher probability, yeah, I don't know. Maybe, but I wouldn't be trading it personally. Yeah, it looks like it wants to do it, and it's doing it because look at the aggressor in here, right? And there it goes. However, I'm still kind of looking at these levels in here. I'm looking at this liquidity in here. And I know that this has been a down day so far. Okay, so yeah, the next level here is to, let's see if we can come up and test here. Oops, sorry. Up here around 38. Okay, that swing, and let's match it up with some liquidity. And I don't see any liquidity, but I do see that we traded into here, and it was mostly absorbed. Okay, so let's see if we can get a pullback here, back down to 33.5 here, where it just came from. All right, so we're getting kind of lofty now. Anyway, let's jump over to that market pulse tool, and I can show you that. And I also want to show you TraderMap Pro again. We went over it on Friday. Okay, so I do want to show though. Slowdown had a great image, and I wanted to show it again. All right, so I had 3 up, and we can show these 3 again. Okay, price change, volume. This is the a volume pressure imbalance indicator. I'm going to show that, and also volume pressure. Okay, so the difference here between the volume volume pressure and volume pressure imbalance is basically it's the delta, right? So it's going to show you the imbalance, and you might find that more insightful. All right, so here's our volume pressure on the left hand side here. This was the first algo that we came out with here for market pulse. Okay, so all it's doing is looking at a look back period here of 5 minutes here, and let's see, where is it? Yeah, 5 minutes here, our training period, and it's a continuous sliding window of 5 minutes of data, and if the new data coming in is a lot more than the previous data, and the indicator hits above the 70 threshold here, okay, which is this little white line in here, then we will hear this. Okay, that's the way it works, and that's the volume pressure. Okay, now the volume pressure imbalance, let's right click on that, and yeah, we have same setup here. It's showing the delta in here, also in the subchart. All right, so this is buy minus sell. This is like cumulative volume delta, and it's going to tell you, and it's, you know, hit those thresholds when that that cumulative volume delta, basically with a look back. It's going to be different though, because it's a look back period of 5 minutes, sliding window, right? So we're looking for that in here. It might give you additional insight, or a little bit easier insight than your volume pressure, because this is going to be both buying and selling in here. All right, and then I added this one in here, which is price change. Okay, so what we're looking for in here, or what I was demoing on Friday with these 3, was starting to understand if we get a lot of volume pressure, but also with a price change. So in here, this would have been pain, I'm pretty sure. Okay, that we're getting a strong move in here, and that's what we're looking for. Strong move and volume, moving it away from a previous area here. Okay, and that's what it takes to move away from an area. Right, that's how you get, you can look at your profiles in here, and you'll see a top edge in here that it'll show, it's not really quite doing it here, but typically you can see like it's kind of skewed here to the upside, more volume trading at a higher area here. When you really see that edge in here, it's going to be more like this here, You can see quite a bit of volume trading up here. Okay, and what that means is price is accepting up here. There's action, there's interest, it's transacting up here. Okay, really simple concept. And if it is, then someone thinks it's worth this. A lot of people think it's worth this. It might be worth more, and people might want to pay more for it. Okay, and meet these sellers up here. And that's the concept. Okay, Stan, I hope I answered your question. We'll continue to keep this open for now. Yeah, I still like it here to the upside. Basically, I know we're kind of up there already, but we just traded into this liquidity. It stayed in the order book. It transacted here, and we also have trapped sellers. So I would look for a bust above the 36 here and a stop run into this waiting liquidity here on the offer. Okay, so that's a small short time frame move, but nonetheless, it's the same concept we just covered. In fact, okay, looking at you know, this you know, we're not getting a whole bunch of volume up here. It's mostly trading down in the middle here, but I still like it. But we'll see. Maybe it dries up. Maybe we get exhaustion like we are, and maybe we get sellers. Let's see. Do we get sellers here at 35.5? Not yet. See, that's why, again, we look for, now there they are. Okay. I don't know. I'm still just kind of yeah, ambivalent about it right now. I would not be if the bid showed more up here and they're pulling on the offer. Okay, and then we get our buyers back up here at 36 because it's exhausting here, but these sellers they'll be getting stopped out on the way up here, right? They'll be trapped, and we'd look for that scenario. Yeah, so now we're starting to get it. All right, let's see it, buyers. Let's see our stop run and move to the upside here. Bid would be great to see the bid showing more here, and then there we go, a little bit right there. There we go. All right, all three of market pulse indicators are ticking off here. T.Y. Lambert, good morning. Are we still sitting on the sidelines or actionable trades that should have been triggered? We've gone through a bunch of different scenarios in here. Okay, yeah, I see it. I just answered that. Yep. Are the colors on the heat map with pending orders? No. Oh, I'm sorry. Yes, they are. Well, they're sitting in the order book over here, current order book, right? And also to the right of this vertical white line here. Okay, that is the current market in here, Bobby. All right, now everything to the left is the historical, right? Now you can see though, like up here, like, you know, this is historical and current. So these guys are still up here wanting to trade at 39.25, right? And what's nice about Bookmap is you can zoom out and you can look at that 39.25 here and start to understand, okay, when did they come in? How long have they been in here? And do they mean business, basically? Like, do they want to trade? Well, we don't know that until it actually transacts, but it looks like they want to. Okay, as price is coming up, they want to be sellers. So yeah, that's what we kind of look for. All right, so we got to move up to the upside here and do kind of 38. Now be very careful here. It looks like sellers are coming back in to trade it right back down to 35 here, maybe 34. Okay, this is again kind of a potential trap of these guys here, and then looking for our sellers to come in and try to push this lower. Lambert, I'm really not looking at initial balance highs and lows. Instead, same concept, but I just look at the kind of higher levels in here and who's in control in these areas, right? So in fact, this did turn into a reversal here, as you guys can see. Now we did talk about it as being this is not a low volume pullback. Okay, we talked about that in detail, and you can see what unfolded. Okay, so price continued on up, and yeah, I was still kind of looking for you know, it to do this little double top in here, and then sellers come in and then move it back down lower. But we didn't get enough sellers in here. We got the buyers that came in and traded up into these higher levels here. Okay, so the reversal pattern is rather complete here. Yeah, Stan, play around with it. I mean, I you know, have a bunch of the different configurations of these market pulse algos in here. You know, we've done it many times over. We had several of them. We're looking at correlated markets. Find your correlations that you want to study, and you know, add the algo to that here with the market pulse. Okay, so for example, maybe you want to look at Apple or Tesla or Microsoft or something like that, and you're looking at the NQ, okay, or the S&P, doesn't really matter. You know, these are two big players in both markets. Yeah, so I mean, I like the I like the concept very much of initial balances, or you know, opening ranges, because it's a volume event. You know, look at where most of the volume transacts. That's what we really want to understand. I don't really care about the, you know, too much about the balance part, the initial balance part. Instead, like I'm much more. It's my style to look more at the volume, or the transactions, and also the relationship in here with the heat map. Like right in here is pretty good insight. You know, it traded into it, and we still got some trading above it. However, now I'm looking to see, we've traded up here to this swing here, and I'm really curious now if we're going to get maybe a bit of exhaustion and some sellers in here, and at least trade back down to 35.5, or bottom of the range here, 34. Okay, and I don't see it yet. There's nothing there to tell us that yet. We just do know that a lot of the passive orders are getting filled here on the offer on the way up. Okay, now we're looking for potential exhaustion of the sell side, or I'm sorry, the buy side in here, because they've been trading up into all of these limit sell orders. Right, and that's essentially what traders are doing when they're looking at their cumulative volume delta setups, that divergence. So you know, you'd be looking at absorption up here, and then you'd be looking at maybe less trading here, but I don't see it here either. So this still looks good to continue to the upside, basically based off of cumulative volume delta, just based off of that, right? Because we look for a divergence in here, and we're not getting it. Okay, what we'd be looking for instead in cumulative volume delta, the setup would be tons and tons of volume like there is buy side here. And then now we're looking for maybe a move up to the equal high here, but less volume on the buy side because there's more. We're looking for more selling, right? Then we'd look for sellers right around in here, around 37, and then for them to drop it to the bottom of the range. And that would be the concept in here. All right, so let's zoom out again. Yeah, like I was saying, like initial balances makes good sense to me about the first hour because most of the trading is in the first hour. Here, we can take a look at a 15-minute chart here and confirm that. So, you know, here's the first hour, and then you can see the afternoon, and then you can see it pick up at the close. Here's the first hour. You can see it just drop in the afternoon and then pick up at the close. This is, you know, the pattern again and again is the volume smile in here. So then it makes sense to understand, okay, well, where are the transactions happening? Where are people positioned? And now we want to look at how they're going to react based off of that. So it's a volume event, but it's very similar to any other volume event. The transactions here, and here's the most of the volume is, well, here, here, and then some in here. It really starts to pick up on the buy side actually above here, right in this area here. All right, so yeah, the move continues to the upside here. Okay, we were looking for potential exhaustion and sellers, and we didn't get it, right? And we didn't even get a break of the structure in here, so you wouldn't have been sell side in here at all. Hope that makes sense. I'm sorry, Lambert. I'm trying to answer questions in here in YouTube as well as Discord, and going back and forth can be kind of challenging. Yeah, you might want to jump over to our Discord channel as well. Yeah, Bobby, the levels I'm looking at, like if you're looking at, like, I don't know, you know, previous days low, high, etc. Yeah, we covered it kind of here, and that's why we came up with that 41.20 level and then 41.10, and we did not cover the opposite scenario today on the higher time frame. But you know, here come the buyers right back in. So to me, it looks like you know, at least on this time frame, like in these two, at least in here, the hourly and the 15-minute chart, that yeah, I'd be looking for the move maybe back up into about here, which would be about 41.40, I think, 45. Yeah, 41.45. Right, then we might start to find some sellers and profit taking up in here. Okay, maybe 41.50. That's quite a bit higher. 45, 46, something like that. Yeah, no problem. No, you can see we marked up these levels in here. Now we marked up these levels in here on a much lower time frame. But yeah, absolutely, it's really essential to understand the bigger structural areas on the higher time frames. Okay, because you know that there's going to be a lot of activity around those areas. Okay, that people are going to get very emotional. This looks like it could be some low volume stop picks and reversal back down to high. volume moves. Yeah, I don't know. I mean, I don't see a structure break in this move yet at all. It's a pretty strong move. Look at the there's a couple of things to look at here in terms of price action. You can see very clearly, you know, the we talked about this, I don't know, a few weeks ago, a few times, different webinars. In terms of price action, well, this is a pretty strong angle here. Okay, and there's a lot of volume behind it. Okay, that's why it's exactly the same things. We're looking at volume, pressure, and price movement. Okay, that's who's in control. Now we identified at the start of the day as sellers in control. Okay, and then we noted down here, sellers still in control. Okay, and then buyers coming in, and we did note the volume in here, and we're looking for a move back up to here. These two little lines here, and that unfolded, and then we still had more buyers. At this point here, though, before it came up into here, we noted this is not a low volume pullback. Okay, this is different. It's a distinction. Now, we didn't know this was going to unfold. In fact, I was looking for another move back down and then maybe a move back up. It didn't do that. Just more buyers came in and just started moving it back up. Okay, so I'm still kind of waiting and watching in here. Are we getting more buyers in here? Well, not right now. Look at this. Okay, so here comes some sellers trading into here, yeah, I'd look for the sellers to bring it right back down. Now I know this is only like a point or so, back down to like 37.5, but maybe they can even bring it down to like 35.5. Okay, some of these other swings. Okay, this is why. Okay, this is why we're looking for that to unfold right now. Is we've been trading into all of this liquidity up here, and then we know that they're getting filled on the offer on the way up. So now we're looking for when this just might exhaust out on the sell side. Okay, when there's just no more buying pressure left in here. So and we can kind of read it in here in this very small time frame in here, the back and forth in here. Now again, like, you know, it's still, let's just be clear. I'm looking for the sellers to take it here. I see the selling pressure come in. I'm looking for it to at least trade down to 36.5, maybe 30, 35.25 here. Okay. However, we're still in an uptrend. Okay, so but in a smaller trend here, you can see it that it broke it, and then now it's moved to the downside. And there's our move into 35.5. Okay, very, very quick move into that. Okay, that's going to be a stop run as well. All right, so some good insight here by understanding this context between the aggressors trading into high liquidity here on the offer. Guys, I started this off and I forgot to even come back here. All week long, we're having our Pro Trader webinar series. It's all week. So today, this afternoon, it's Fausto Puglisi. Actually, it's not Fausto. He couldn't make it, but it's actually going to be his the guy Josh, who runs the trading room in there. Along with Fausto. So he will be presenting. It's at 1 p.m. today. Now, the rest of the week, though, they are at 10 a.m. Okay, so tomorrow we have Frank Marrero. It's going to be both Spanish and English. And then we also have, Jay Trader on Wednesday. Thursday, we have Scott Pulsini. And Friday, we have Charles Goff from Pirate Traders. All at 10 a.m. the rest of the week. All right, so just today with the Cyber Trading University, will it be at 1 p.m. Okay, so tune in later today. All right, guys. Well, anyway, let's talk a little bit about trade management down here. This move unfolded pretty nicely to the downside. I would be out one position for sure, and I would be considering the second. Not sure yet. You know, until I see some buying pressure come in or exhaustion here in the bid shows me something more, then I would get out the second position. For those of you, I really recommend this, and I'll explain why. For those of you who are maybe just starting with Bookmap and order flow or trading, you may consider just getting all in and all out. Okay, understand and read the order flow correctly. Try to be very objective about it. Have your reasons for something. Like what we're doing in here, we're going through this process and we have a reason why we think this might unfold. The more objective we are in here, the better this works out. Once we get tied up in emotions and like, oh, well, I was right the last 3 or 4 or 5 times or whatever, it's going to do this, it's going to do that. That's where everything hits the fan. So, and just it unwinds. And the best thing to do is each individual opportunity is a separate one, and just be objective about it as you were in the last one. Okay, and we're looking for, it's a scenario that may unfold, it may not, but we're looking for something that offers a little more probability, and we're like a kind of like a detective putting the pieces together here, understanding that, wow, okay, well, there's a lot of orders getting filled here on the bid, on the offer on the way up. Okay, strong move, true, right? But we know that they're getting filled in here, and it's like, wow, are there really still buyers in here? And we started a note in here. There was just, it was starting to wane. Okay, so now, and then we're looking for sellers in here, and then we're looking for the move back down lower. I think, I don't know, what was our first 36-ish, and then 35.5 was our next level here. It came back down into this one here, around 34.5. So anyway, if you take that, just start with it. Okay, if you're new to trading, consider it all in, all out. Here's why. Now, it's not a trade recommendation or a risk management recommendation. We can't do that. I'll cover it though. And my reasons for speaking about this is that if you're looking for all in, all out, your trade management is very simple. Your risk to reward is very simple. It can get very emotional if you try to scale out one and then wait and then get out the other. Okay, you're trying to hold for a runner. That's a lot harder to do because now trade management is complex. Instead, all in, all out, look for the next opportunity and get in the habit. There's good reasons for doing that. One is now you're looking for a very specific setup to unfold, and that's all. If it doesn't, you can get out. Okay, you can reduce your risk very quickly because with order flow and these structures and these transactions in here, you're looking for it to work. If it doesn't work, something else is up. You can reduce the risk. You also know very clearly what your risk to reward is. And it gets very complex when you take a few losses with a full stop out of several contracts or multiple contracts. And then you got a winner and you scale out of one and you hold it and you get stopped out at break even on the next leg. You're still going to be at a loss. So just consider keeping it simple. It'll be less emotional, and offer you likely offer you the higher probability to be profitable. There's one more element here that's really important, is that it will focus you on your setup, and get really good at your setup. Okay, you want to be an expert in your setup, what you're looking for, some sort of imbalance in this this order flow, and then you're looking for your setup to work out, and it should work because you've studied it. Okay, more likely to work than not. And then you can worry about all the other scaling in, scaling out, all that kind of stuff later. Just get really good at that, and look for the next opportunity. Okay, and then I would recommend, this is a recommendation. Go do this into the replay mode in Bookmap. Okay, do this as many times as you can. Whatever it is that you're trading, or your way of trading, make sure that you're practicing it over and over and over again. It's no different than a musician, an actor, a football player going to practice, and really becoming good at they're honing their craft. Okay, and we need to do the same thing, and then you know exactly what you're looking for. So Hector, there you go. I think that applies to a lot of the questions you were asking. Conjurado, can I talk a bit about accumulation, distribution, and a range? Sure. Yeah, really, Hector, that's where the magic happens. Again, what we're covering in here, I mean, how much? You can ask me as many questions as you like, but you're not going to get much out of it unless you start doing it. It's not some sort of little tip or tidbit in here that's going to make this worldly change for you. What it will likely be like is you'll listen to that and go, okay, let me try this. I'm going to try to trade it, and you throw money at it, and you lose a few times. Maybe you have a few winners, but then you start losing, and then you're going to go from that and go, well, this sucks. This doesn't work. I'm going to try the next thing, and you're going to try the next one, and it's going to just be a repetitive process, and it might go on for decades. Okay, instead, stop, understand the concept wholly, and do your own studying. Okay, and then does it work for you? Do you know what it looks like? When do you have an edge? Now, can you trade it? I mean, there's a whole lot of steps in between just those two. Does it work for you? Do you have some sort of edge? Do you have some sort of understanding? Yeah, I was thinking over the weekend, there was something that was kind of cracking me up. I'm sorry, guys, I'm ranting or rambling here. We'll get back into it here. But this is important stuff, because we just went over trade management that could really be helpful potentially for you, as well as we covered the order flow events, and risk reward, and looking for something very specific, right? So it's really important. But what I was going to speak about was the was it I think it was the Apollo missions, and look, I'm going to hack the story, so I'm sure one of you knows it a lot better than me. But they're building the Saturn V rocket, and it was one disaster after another, but they honed it and they crafted it through testing and tracking the data, and they had milestones no, we have to get stage 1 of the rocket to work before stage 2. There's an interesting history to this, And you know, you might just for kicks look into it, but it was through testing, right? Until they know that they had something that worked, right? You continue to test and fail and test and fail, and then ultimately you have something, right? So it is no different in here with trading. All right, so let's see here. Torino, welcome. You're new in here. Yep. All right, you want to look at the lower time frame in here? Sure. Yeah, it seems like a lot of you guys like the lower time frame in here. Well, right now here we got a little bit of a imbalance here. Some buyers coming in. Let's see if they can trade it up to 40. See, look at the bid under here. Look at the buyers coming in here, and yeah, I want to see them trade it up to 40 here. Okay, if we get a pullback, I'd look for the pullback to here, 38 1/4. And let's see if we can get more buyers in again. You mean down here? The lower window pane. Okay. We're looking at cumulative volume delta at the moment. Okay, buy minus sell. Yeah. So you can see there's actually, well, we do have some divergence here actually in the negative divergence. Okay, there's actually more buying, but they're failing here to make a higher high, in fact. So, yeah. Well, you can see what happened. It traded to the low of the range here. I'm not giving up on these buyers yet. I kind of like it here, as if we can get, now I'm really looking at it, to be honest, right here. I'm looking for buyers at 38.5, because I do see the selling pressure in here now, and I'm looking for them to get upended. Okay, so now I'm really looking for a big green dot here, and I'm looking for something on the bid in here, and I want to see this liquidity up here. I want to see it pull, even maybe some in 40. I want to see it pull. Okay, if I get that, then I would look for an opportunity. Okay, and I'm not getting all of that, right? So I would that's how I would filter it, and this would not be an opportunity for me. And it might happen very, very quickly here. Yeah, I mean, I see it. I'm still looking for it here to 40, but again, it doesn't have all the pieces in here, so I would still shy away from it. Okay, the bid looks better for sure, but they're still on the offer here. Yeah, okay, well, you want to look at stops and icebergs down here. These are, we can look at very specific order types that are transacting here. The blue line are showing iceberg transactions on the bid. The red line is showing stop transactions. Okay, the order, stop order transactions. And if it's a, I mean, these are sell stops here. If it's a move to the upside, I mean, it's buying, but it's the stop run is going to be, it's basically people getting stopped out that were short, like right there, like right in here. Yeah, this is one I typically have up. I like it. It gives a lot of insight, I feel, because now I can not only look at stops and icebergs in here, I can look at, I'm sorry, not only can I look at the precisely where the limit orders are, and if they're transacting, I can look at larger players using iceberg orders and where they are transacting, and I can also see some of these maybe quick moves to the upside, like this here, this buying in here. Was this buying in here for real? I mean, it's real buying, there's no question about that, but are they initiating a new buy position? And it's a stop run. It's a huge stop run in here. Well, it's not that huge actually. This is why we want to look at the numbers. Okay, so yeah, it's not that many actually. So there is a lot of new buying in here actually. Okay, so that's what we want to understand. Okay, if it's new buying, can we get more buyers and lift this higher? Yeah, let's see a big pop here. Would love to see this. Look at the bid starting to look a little bit better. All right, great. I'm looking for a huge stop run here and a quick move. Let's see if we can get up to maybe 45 here right now. There we go. Come on, buyers, keep buying. Let's see it. I like it up to, well, yeah, 42 would be the first area here if we zoom out a little bit. I would say 40, let's call it 43. That would be the first stop, but the liquidity is up here, 47 and 45. Okay. Yeah, this is playing out really nicely. All right, let's see if we can get a continuation though. Rob, sounds good. You're trying to reduce everything down to the least possible number of inputs. Exactly. Yeah, exactly. It just get one or two things down. That's it. That's it. And then you can always scale out and scale in and do all sorts of things. You can always add stuff in. But just get a few things down. All right. This is something we did years ago with Alan. I don't know if Alan's in here. But the question was asked, oh, that's great, Bruce, like the analysis on this going this way or that way, but how do I trade with it? And it's like, okay, here, let's keep it really simple. You're looking for this event to unfold. You're going through the scenarios of what might happen. And then when it starts to unfold, that's when you have an opportunity, because you're looking for that scenario, that order flow scenario to unfold. And it starts to give you clues to it. And when it does, you know what it looks like because you've studied it. Therefore, now you have an opportunity to get involved with it and then also manage it. And where do you think it might go and why? That would be your target. Okay, what about the stops? This is the most important part. Okay, what if it doesn't work out? That is way more important than if it does work out, in my opinion. Controlling losses. Do not have them spiral. Do not add to losers. These are the things that blow up your account. Right? And you might be just brilliant at being able to identify some of these moves and not make money out of them. Or maybe you make money out of them for months. And then one day, just one day, it wipes you out. Right? So know when to lose and call it quits and get out. That is probably one of the hardest lessons to learn. Okay, it's all about losers, to be honest, not winners. Okay, it's fine if you go for several weeks, months, just basically at break even. Okay, or maybe just small losses. If you can learn just how to control your losses, you will be profitable, I imagine. I mean, everyone tells me that. That's what the process I've gone through as well, and still struggle with. It's just human nature. Okay, but control the losses, and don't kick yourself. you know, support yourself when you control your losses. And then the next step after that is controlling your winners, which is really hard too, because you know, you just want to take your profits, and if you don't have any reasons yet for taking your profits, well, you might want to move your profit, or your take profit. Then let's go through an example. So, you know, here my take profit in this move would be up here at 45, or let's say 44 and a half. You know, I like to front run the high liquidity, to be honest. So maybe 43 and a quarter, 3/4 here, you know, something like that. That's where I'd be placing my take profit. Well, let's suppose that we get just strong volume coming in, a little bit of a pullback, and then again strong volume coming in, and they're pulling. They're not still in the order book up here. In fact, they flip. They pull from the offer and flip to the bid, and I still see strong buying. Then I'm going to lift my take profit higher. Okay, so that's managing. It's like managing your losses while also managing your profits. And this is, you guys have probably heard this a million times, but Hector, I would, you know, suggest really looking into that, controlling your losses. Okay, looking for your, first off, you're going to have to know your very specific setup. And then secondly, and know you have an edge. You have to know it. You have to believe in it. And then secondly, it's the next step is don't worry about the profits. Just control the losses. How do you manage the trade with the stops? All right. So if you get really good at that, once you really understand the your setup and you're controlling your losses, you're going to be able to let your winners run, and you'll have it down. All right. So another thing that we do in here, this is important. In this webinar that we've had for years, it's really important to understand. I'm going to go to the learning center here, this new learning center we put together. Okay, so go to bookmap.com, go to the more button up here and go to the learning center here. Okay, under resources, learning center. All right, and yeah, let me just reload it here. We have an issue with our calendar. You can see our calendar up with all the events in here, which is great. So this is where you come. All right, where you can see all the Pro Trader webinars in here too. So here's our Pro Trader webinar here. Let's see, 1 p.m. stocks with Fausto here, and then you can see the 10 a.m. in here. Spanglish Trades, J Trader, Scott Pulsini, and then Charles here, okay, with Pirate Traders. Anyway, what I wanted to show here in this new learning center is this course here, Market Mechanics. Okay, this is really essential, and this is a little bit separate from what I was just describing. Okay, about, you know, honing your strategy, your setup, exactly what you're looking for, and going through the scenarios in here, and then looking for your strategy or setup to unfold because you've studied it, you know your scenarios, and then how to manage it or consider managing it along the way. All right, and controlling losses. All of that's good. This may seem like a distraction here, but it is not. It is very important to understand how these markets work. It is this course here. Okay, it's older, but I would really recommend that you come in here and you watch this course. Okay, we go through basic market mechanics that a lot of traders just don't understand. They may have been trading for decades, and they may be very profitable as well. Most likely not, because you have to understand how these markets work. All right, what really makes price move, who's on the other side of the trade, etc., is essential. All right, so once you start to understand that, then you can start to look at these different scenarios that we're talking about in terms of a setup. Okay, and here's a really quick way to explain why that's important. If we look at a candlestick pattern, right? So this is a bullish candlestick pattern, no question, right? You'd look for this to trade up into 45. Okay, so and there's no reason to think any differently, right? Well, does it fit the order flow? What's in between the candles here? Yeah, it does. Yeah, I still see more buyers up here. I see them pulling a little bit on the offer. I see them adding on the bid. Now, I'd like to see them add a little bit higher here and pull a little bit more here. That'd be nice. And then we can have a straight shot up into 45. Okay, now that's what we see currently. And this candlestick pattern is more likely to unfold. Okay, this is based on the market mechanics. Now that might shift and change. What if it does? What would it look like? Okay, well, it might even do it right now. I'm looking for, if that is the case, in the scenario, I'm looking for sellers here at 41.5. Okay, maybe a little bit lower, 41.25. Big red dots in here. And I want to see these guys here on the offer pull and add lower. They're going to add underneath here. Oh, I'm sorry, above here, but not by much, right? And then we'd be looking for our big red dots here to pull it right back down into 40. Okay, and transacting to this liquidity here, not because it's the candle low here, it's because there's liquidity there and it's the low. That's what we're looking for. Okay, so that's the market mechanics part. And that's there's something is really lost in here when people study candlestick patterns, CVD, volume profile. It does not matter. You're not understanding really the market mechanics behind it. And it's on all time frames. Okay, this works on the very small time frame, micro structural time frames, as well as zoomed out to a monthly chart. Okay, it's all the same stuff. It is the transactions and the orders within it here, the behavior of others that will give us insight to this traditional candlestick pattern, which should work, right? But now you're going to know if it's more likely to work. Okay, and so far so good. So far so good. We're looking for the opposite scenario to potentially unfold here, and it did not. So we're still looking for this to go higher. Okay, this candlestick pattern has a higher probability of working out. Okay, look at them on the bid here. Now they're still on the offer here at 43. And are we getting aggressive buyers due to this activity of the players here, their behavior? Not really. Price is just kind of hanging out right here. So they're not really reacting to these. Well, maybe we'll get sellers. Maybe they'll trade into this here. Okay, maybe it's now we're looking for this previous setup in here, or failure of this candlestick pattern. Maybe that happens now. Let's see. Okay, we're looking for the same thing. We're looking for sellers down into here. Okay, and then the order book to shift and change. There they go. Okay, now the order book didn't shift and change here. They're pulling down here. Okay, but I just don't see a lot of limit sell orders down in, oops, sorry, down in this area here, or above in this area up here. Okay, so maybe it's just back and forth. Okay, understood. So again, that's why we have this market mechanics course. So now you can start to put this together with your patterns. Okay, and that's what these webinars are here for. This is a foundational course for understanding how these markets work with the mechanics. Okay, so yeah, I really recommend it. And then come to these webinars, ask questions, look for these, go through these scenarios, build these scenarios of what might unfold in here. It doesn't have to be a candlestick pattern. let's suppose you look at your initial balance high and low, or midpoint, or your value area high, value area low, whatever, doesn't matter. Look at the order flow and the market mechanics behind those levels to give you the insight to where price might go. Okay, it is the behavior of others that we're reading in here with the market mechanics. Okay, so here we go. Look at how this pattern is now starting to fail. Okay, now they're on the offer. Look at where they are on the offer. Not here, they're here, right? Pushing it down. Okay, now think about this too. Now that we know that is starting to fail, okay, where might it go? Well, in your candlestick pattern, it's already done it. It's come to 40 in that swing here. I want to see it come to this one at 39. Okay, and below all of this here. So think about it. All of these buyers up here thinking that, well, this pattern looks great. It's going to 45. They are now trapped. Okay, and we're looking for a stop run here. We already got one. We're looking for a bigger one though, down into 39, maybe even lower. Maybe down to 30, 38, 37 and a half, somewhere like that. Okay, that's from understanding what's happening here within the candles. All right. All right, guys. Well, let's see here. Let me get to some last minute questions here. Gurick, yep, all in, all out. Yeah, I mean, I know professional traders that just do that as well, and they just don't care. Like, it's like, I'm all in, my stop is here, that's it, and my take profit is here, that's it. I'm looking for it to work, and they just even call it a day basically, and go home. It will just ease your mind if that's something you want to do. Consider it. Rob, it looks like Rob is, I know Rob's been trading for a while now, is looking for reducing the inputs and getting to more simple trading with those maybe all in, all out, right? Okay, let's see what else is happening here, guys. If you like this, please hit the like button before we go here. That really helps us. Why Bookmap better than Footprint? Okay, so yeah, well, the Footprint chart will be based off of, first off, there's no limit order book in the Footprint chart. It's all aggressors only. That's the biggest difference. Okay, so that's all you'll see. You won't see the other side of the trade, that interaction between the other side of the trade, which is really, really critical to understand. Okay, that's what we saw, all of that absorption on the way up. We're looking for the sellers to bring it back down, right? And it was right in here in this little area. And then right up in here, we're looking at our candlestick pattern and going through some different scenarios as well. So understanding the other side, who's taking it, is really important. The other thing that Footprint chart just is pretty horrible in doing is showing you the microstructure, or showing you more smaller structural levels in here. It just doesn't do it because it's aggregated data within a bar. So you get this big bar and you'll see all the volume trading on that bar, very specific volume, which is great, very, very good to understand those areas, high volume nodes, low volume nodes, book sweeps, etc. But it's all aggregated. You will not see this little structural area and then the pull away like this to understand that, wow, okay, this is trap volume and now I'm looking for a stop run. Okay. You may or may not, but a lot of times you won't. In fact, a lot of times it's funny, what we see in Bookmap is, since we're kind of zoomed in here looking for this specific scenario to unfold, like right in here, and then it did it here though after one more hit to the high. We look for that scenario to unfold and we're all over it. The Footprint trader is looking for the pullback. They're looking for this here, back to that area. So we're already in it, reduce some risk and maybe adding back into it. Or all out, all back in, you know, whatever. I mean, I'm not recommending a trade up here whatsoever. This is kind of challenging to understand. Okay, if those buyers are going to come back in and bring it back up to 45 at this point. And they didn't. It just came back up to the swing. All right, that should answer your question there. Rob, you've been loving the Learning Center. Excellent. We're going to add more and more to it. Okay, we're really going to build it out. All right, let me go over to Discord. Anything that I missed in here? Yeah. Anyway, yeah, we'll go through. We're gonna come up with some very specific setups. So let me just outline it a little bit. What we've got going in the Learning Center here in Bookmap, okay, is we're going through the scenarios for you guys. Number one, you got to get connected to data. Bookmap's the platform, and you got Bookmap. But you know, here you have the different videos in here, how to connect to CQG, DXFeed, Rhythmic, whatever it might be. Now you can go back here. We put this course together here, getting started. Okay, now this is about the mechanics though of like how to add a symbol, volume, what is the volume dots showing, etc. What is the heat map showing, how to read some of it in here. Okay, so that's another element or a course in here. That just gets you started though. Okay, now the next one is the market mechanics course. Okay, you want to understand like what is Bookmap showing and how to read it. The next course after that we're going to have is going to be on trading setups, right, and strategies. You can see that we have, you know, order flow phenomena, add-ons, and insights, etc. But these courses in here should really help you out, and that's our goal. Okay, Greg. Yeah. So you went through the market mechanics course. That's great. Yep. All right, guys. Well, anyway, don't forget later today we have the Pro Trader webinar kicks off for the week at 1 p.m. and it's with Josh. He's at Cyber Training University. Fausto couldn't make it today, but Josh is an excellent trader. So please come and check it out. I think you'll learn a lot. They've been using Bookmap for years now. All right, so good stuff there. Thanks everybody. Thanks for coming, and we will catch up with you tomorrow with Frank Marrero from Spanglish Trades. Okay, have a good day, everyone.